All right. The Psychology of Money, Chapter 4. This is such a good book right here. Good book. All right, all right, all right. Confounding Compounding. Here we go. Chapter summary. Morgan highlights the astonishing power of compounding, how humans are naturally bad at understanding exponential growth. I mean, I think I get it. I think I totally get it. Sometimes when I do the math on, the compounding and the exponential growth, I get a little it kind of flips my greed meter. I have to be careful with that, right? 20 apex accounts, 5 top step, you know, gets a little on the greed side, so I have to be careful with that. Okay. So compounding is reason responsible for most of Warren Buffett's wealth, not just strategy, but time in the market. All right. So the big lesson is good returns sustained for a long time beat returns that don't last. That is so true. That is so true. That's why if you over risk, you're going to get wrecked. It's just mathematically going to happen. It just truly is. Most people disagree. They're like, I got an 80% win rate. I'm like, yeah, but your 80% win rate, you're not making money with it, right? Because your risk is just out of control, you know? Anyway, okay, so key themes. Time is greater rate of return. Okay, the length of time you are allow compounding to work is far more important than hitting high returns in short periods. That's why this silly strategy of mine works, because it's actually pretty consistent. It doesn't have the highest win rate. I think most people, in a sense, would struggle in their mind to trade it, but those who have, they see it. They totally see it, right? So small, consistent wins beat big, violent ones. All right. And, like I do highly believe that I usually trade a 1 to 3, right? I risk 100 to make 300. Okay. And um, there are many times I've gotten a 1 to 6, 1 to 10, 1 to 11, 1 to 4, 1 to 5, and when you hit those, they make a big impact on your account. But I am very like I when I go to risk my 3R to try and get 4R, I am very greedy with that 3R. It's like I am trailing so tight because I would rather get stopped out at 2.85 or 2.9 or 2.95 and then miss the actual move than to risk it going back and then me closing at like 1.5R and stuff. So I've just done the math. It's just what works for me 100%. So yeah, I get what they're saying, but I do kind of go for those big wins sometimes. Um, but that's a whole part of the strategy, right? And so most wealth is hidden in time. This is huge. A lot of people don't understand that price action is important. Don't get me wrong, but time is almost more important than price action to me, right? What time of day am I trading? You know, what time is it? Like what time of day? Yeah. How long am I in the trade? What time based liquidities am I using? I don't pay as much attention to the macros as I used to, but I used to look at that, right? And I truly believe that time is something that is overlooked, but I'm like, dude, it's the bottom axis, axis on your chart. Like you got price and then you got time. You got to pay attention to the time for sure. Okay. Um, and the longer that, like, a lot of people I know, when they scalp, they scalp and then if they're in the market too long, they'll kind of give back any profits that they had. So the longer that you are risking being in the market, to me, is actually a risk factor, right? So when I used to scalp, like super scalp, like 5 second chart scalp, one, it was absolutely mentally draining to me, and I was good for about an hour, hour and a half. After that, it just didn't matter. Like I just like lost logic. My brain got tired, all the decision fatigue. So I just learned to cut it at 45 minutes to an hour in 15 ish, somewhere in there. If I felt the fatigue, I'd quit. Like I'm done, even if I'm losing. Because the problem is, oh, if I can just get one, I can make back half these, and you snowball, right? So that's a whole thing. And then sometimes if you're on a losing streak, you get worn out mentally faster because you're more stressed out. So that's just something to, consider. All right. So, most wealth is hidden in time. Compounding doesn't feel logical because results are invisible in the beginning and are unbelievable later. So, my long term holding portfolio is very important to me. And it's very important to the mentality of my day trading. Like, I think a lot of day traders are wealthy because they bought Bitcoin low price, they held it, they've invested in Tesla at a low, low entry, and then they held it. I think it's happened to a lot of people, right? And that's great. That's fantastic. So their day trading isn't hinged on their portfolio. That's why I love prop firms. And I know some people are like, ew, prop firms. I'm like, well, I can play with their money, and I've kind of found a little bit of a cheat code with prop firms, you know, and when applied, like the risk to reward is kind of off the charts in my favor. I'm sure if I sat down with them and discussed my formula, they would be like, you're not our favorite customer. But anyway, it's huge, right? And so, but having that clarity because I have a long term portfolio that's making money, it's so helpful, guys. It really is. A lot of people want to hinge everything off their scalping strategy, that they just want to sit down at any point in the day and trade 24 hours a day. So they're like, I'm going to trade Bitcoin so that way I could trade 24/7. It's like, okay, so the same strategy that works on the weekend may not work on market open or this, there's so much that goes into it, and a lot of it is time based. Okay, so survival is the real skill. I think that is kind of a big difference between me and other traders, and I'm not trying to differentiate or anything, but is when I went from that that little bit of money into like thousands and thousands, like $6,500. It wasn't crazy, but then I lost it all down to $40, and then I put $200 in and said, "This is it. I'll never put more money into this account ever again." And then that account grew to some just absolutely redonkulous 5-figure numbers. Hopefully soon 6 actually. Um, and but I mean, we're talking years. That was not quick. That was not a quick growth. And that was super hard because I learned to survive, because I'm like, this last $240, I mean, I was risking like $10 a trade and I was taking like $30 profit. People are like, that's a waste of time. Like, I guarantee the first year, if you looked at the spreadsheet, which I don't have because I'm not a spreadsheet guy, but if you look at it, and if I hadn't moved it all around to Binance and Bybit and this and that and Femex and whatever, I'd be able to like pull it up and look at it. It'd be kind of interesting, but whatever. It is what it is. Um, it would just be so interesting to see, like, I was working so hard to make 20, $30, but I was so stingy with my $10 risk. If it slipped to 12, I was like, "Whoa, man, look at that slippage!" It's like $2. But I think that's where I learned to survive, is because I said, "This is it." This is all I'm doing, and I knew that was going to be it. So I really struggled. I like, survival was real. So the benefit from compounding: you stay in the game long enough, losses, blow ups, and quitting early kill compounding's magic. It is so true. Like I just said last video, because I mean, I'm doing a double take, so I literally know what I just said last video. Um, like people, 2-3 weeks of profits just get eaten up in like 1 or 2 sessions because they go on revenge trading and they YOLO and they risk, they heavy risk. And it's just like, I remember being so sad about that. Like getting my first funded account, and then like, I think I worked it all the way up to 1,800, and I was getting ready to get a payout, and then like my brain was like, dude, you get a payout today, bro. You get a YOLO, and I went to YOLO, and it just it was just terrible, dude. It was like one of those hold my drink moments, everyone's watching and everyone's phones are out, and I went viral. you know I was on the Vine, if you know what I'm saying. If you know what I'm saying, you're old enough. Yeah, so it was pretty wild. And I smoked that account. Smoked it. I was like, dude, I just like literally gave away all these profits because I was stupid. right? Because I was emotional. Okay. So blow ups, quitting early, and compounding kill the magic, especially the quitting too early, right? And like I said, I was connected to people who were making serious money, so I knew it could be done. Um, and I just had to run my own race. And I can run with them, but I still have to run my own race with my own numbers, my own risk, my own accounts. I can't like copy what they're doing because they're yellowing bitcoins into a trade, and I'm like, um, yeah, no, that's not gonna happen. A couple of those, and my account's gone. You know what I'm saying? Okay, so good investing isn't necessarily about making good decisions. It's about consecutively not screwing up. That's so true, man. That's why this whole orb challenge thing I put together, and we're actually doing a revamp on it and creating an actual like trading program that's going to be absolutely amazing. It's going to blow people's minds because it already is. Because we're having people do it. It's blowing their minds. It's great. It's all about not screwing up. It's all about self control. It's all about showing yourself one step at a time what you truly are capable of as a trader, right? So compounding is hard because little growth goes unnoticed, but a lot of growth seems impossible. So one of my buddies was telling me he took like 7 stop outs in a day. Now my cutoff is 5, but he took 7 in a day. And then like the very next day he got one 1 to 4 and then 1 to 2 in the trade for the day. And he's only down 1 hour. So he's like, it felt like a blow up, but it worked within his plan. And so the wins just came and pretty much replaced almost everything he lost. His accounts are looking great, getting ready for a payout. So it's just like, that's so awesome, you know? And sometimes that just not screwing up, right? Taking those 7 stop outs and not YOLOing the 8th trade that should never exist. Not revenge trading, within the first 4 losses and being like, I'm getting this back, right? And just like allowing the small growth to, refill the account, allowing it to cover the losses that you just had last week. How many of us have had a bad month? Actually, one of my 7-figure trading friends had like a month and a half of just red. I mean, it wasn't awful, but it was red, and then just like had a big month. It was like, covered that red month, covered another red month, and then like added like 2 green months in 1 month. It was crazy. It was like, that's what it's about, and a lot of people don't realize that, and a lot of people want it now, and that's what's hard. We are in the want it now generation, all of us. Okay, maybe a few boomers, okay, and silence. Maybe you guys are good and you would totally kick butt at this day trading thing, but us Gen X and Gen Zs and millennials and like alphas, we want it now. Actually, I don't know if alphas are old enough. Are y'all old enough? I don't know. We'll find out. I'll be training some alphas soon. Get some alpha traders in here. All right. Be happy with a little growth. It'll go a long way. Key takeaways: compounding requires patience, consistency, and time. Time is huge. You got to be patient. Okay. The trading program we're putting together, I'm really estimating it's going to be about, I don't know, like 3 to 5, 6 months ish to make it through the whole thing, and should absolutely be in profitability by the end. It'd be amazing. Okay, but that's time. I mean, people want it now. People want that golden strategy. They can just go and click, 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 make money, pew, 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 pew. I looked for it. I hunted it for years and never found it. But I did find some few YOLO strategies that make you some money, but you also just give it right back. So I got tired of throwing dice and trying to cheat the dealer. It doesn't work. But I did find a way, actually. Thank you, prop firms. Appreciate you. All right, so avoid strategies that risk blowing up your account. Survival matters more than excitement. I'm a rollerblader. I was a surfer, raced cars and, anything with adrenaline, motorcycles. I was addicted to wheelies, stoppies, all that stuff. Dude, like, I mean, I watched some of these professional trick riders and I'm like, I had a whole nother gear in me that I never tested that I wished I would have. you know. But yeah, adrenaline, I love it. It's exciting, and I have to be careful with that. And that's actually one of my problems with scalping is that I get too excited. And sometimes if I get into the wrong mind frame, I won't care. And then I will blow a account that I spent time getting funded and getting payouts and it's working and I should just keep going. But I'm thinking big, I'm thinking dollar sign. Let me dunk on this. Oh man, I get no, 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 no. I have to pull back from that. Survival matters more than excitement. Okay, I know not everybody has that problem, but I do know and I recognize that I have an adrenaline junkie problem. So I try to be careful with that because it gets exciting. So actually, my current strategy is the most boring strategy I've ever traded. A lot of times, that's why I love doing my other jobs, running my business, and working my other job because it gives my brain something to do while I'm letting the trade play out or not entering a trade. If I start staring at the charts, I get sucked in. I want to start scalping. So I get off that. What a lot of these traders say, sitting on your hands. But I just give my hands something else to do, right? I run a business, whatever, right? I'm doing all that stuff. Okay. So slow, steady progress leads to exponential outcomes. So true. So ask Dan of all trades. I'm gonna have him on here soon. We're gonna do another interview. He's just doing amazing, and he'll tell you about that. It's been slow and steady for him over months and months and months. I've done interviews with him on here before, and he's just taken this challenge that we've built to heart, and he's following it, and he's successful, and he's getting ready to pull payouts, and it's great. And he'll tell you, it was almost against everything he believed, in his mind. And he's a very good scalper too, but he understands that like that scalping just breaks your mentality, and it's very difficult to work with it. And I'm not downing scalpers because I've seen the videos with like number one scalper, and I can't remember his name, but he was a really good trader. But he was trading a very specific system, right? And I would say our system is not the same, but it's so similar that it's like, yeah, that's kind of what we do, you know? Not quite as institutionalized as his, like intense with PTO charts and stuff. Um, but yeah, so slow and steady progress. The tortoise wins, man. The hare falls asleep, blows up his account. He's tired, you know. He can't hang. He can't hang. He runs too fast, too quick. Okay, so wealth grows quietly and then suddenly. That's true. There is that exponential curve. So same thing. All right. So let's do some reflection questions. Where in your trading do you interpret compounding by forcing trades or over risking? So a lot of people want to just force a trade because they're like, I just got a W. If I get another one, man, that'll be great. That would cover like my last 2 days of red, and I'll make back the trade I lost this morning if I can just get a dub real quick, and then throw another dub on top of that, then like I'll be in the green. Like I'll take away that pain that I felt, and it's just like, nah, man. Like that's the mentality that just breaks you. And if you want to know how I know, I'm telling you, I've been broken. I have been broken. I think that's why I do this, because this is such a great review for me. It is helping me grow. I'm reading these books for some of these a second and third time to make these videos, and I'm just sharing my pain. So hopefully y'all don't have to go through it as deep, But I know some of you have been cut real deep, and you can come in and hang out in the group. We can talk about it. I even do one-on-ones for that kind of stuff. So links are down below for that kind of stuff. The community itself is free, but we do have a VIP section if you do want to live trade with us, and we'll talk to you about our plans and what we do, how we trade, and things like that. So yeah, good stuff, good stuff. How can you build habits that compound over time? I think this is more important. This is actually why I stopped scalping, because I was having a very hard time being a scalper and then trading my strategy. But if you look at the meat of the strategy, it's a scalping strategy. I don't even hold the thing all day. Sometimes I'm in and out within 5 minutes, 2 minutes, 1 minute, 10 minutes, 40 minutes, half a day, but I'm out by the end of the day. The prop firm will close your trade. You ain't holding it all day. So, you got to build the right habits. and then you want to compound those habits over time and allow those habits to build your trading account. I'm telling you. All right. Focus on the process, not the outcome. Right. Okay. So use fixed risk so your account can grow steadily and instead of chaotically. Okay. I've grown some accounts, guys. I've made some money. Like I've made some money, and it was from YOLOing. But there was a few times that I hit those, and I was like, I should have never done that. I know I just won this. I should have never done that. I'm lucky, and I would actually pull like thousands of dollars out and be like, that needs to go away over here, because I know my mentality now is broken. I know I just got rewarded for bad behavior. If I don't hide those profits, they're gone. And so that's what I would do. While I was a boom and bust trader, I made money. And then how I did that is I would do that exact thing. I would pull money out and hide it from me, right? Because I wasn't overly obsessed with the compounding. Compounding is important, but paying yourself is definitely important. Okay. All right. So I do recommend a fixed risk, and as your risk grows, you can grow more, right? With Top Step, it's a little easier, because once you go, plus 2,000, then you just stay at zero, right? Your drawdown stays at zero, so you could exponentially compound with Top Step, but with Apex you can't because they have a trailing drawdown, so you have to pay more attention to that one. That one is definitely a fixed risk, pretty much all the way. Okay, so survival. Your number one goat. Your number one goat goal: avoiding blow up. Okay, this is huge. This is so huge. Protect the compounding curve. Okay, just take your L. I took an L yesterday. I didn't like it. I literally walked away. I was like, man. But you know what? I said it's fine. Just take your L and move on. Okay. All right. Stick with one strategy long enough to see the benefit of long-term consistency. I cannot preach this enough. Okay, it's going to get all Baptist up in here in a minute because I'm going to start preaching. Stop strategy hopping. Please, I'm telling you. I don't even care what strategy it is as long as you stick with it, right? I'm telling you. Your eyes just, so much gets opened up to you when you do this. Okay, you find I have a half decent strategy. I've shown the orb challenge, and people aren't impressed with it, but what they are impressed with is the outcome of it. Okay, they're not impressed with strategy itself. If I put the strategy numbers up on my thumbnail, nobody click on it. They'd be like, "Ew, a 30% win rate, ew." That's a little more than that, but 30% win rate, ew. I'm like, yeah, it's a 1 to 3, and a lot of times because of stop loss management, it's like a 1 to 4, 1 to 5, pretty consistently. That makes money, all right. But it's not popular. Okay, so track the equity curve monthly, not daily. All right, for real. Try and do it weekly, but don't track it. Like pull up your chart just to see your little down arrow. It just messes with us mentally, man. And then like some of us, we can't handle it. We're like, I don't have the ego, man. My ego's bruised. This should have been a W. I should have done this and I should have done that. And if I had, I would have been profitable. Right? So that's just the truth. Okay? Just learn to take your L's. All right? Everyone's going to have L's. Not everyone can be max options who never takes L's. He's a funny guy. All right. Mini exercise. Look at your last 20 trades and identify. This is where you identify how many were small, consistent wins. How many were losses that killed compounding, right? What rule eliminated the destructive trades? Okay. A 1 to 3 strategy is solid. Okay. 1 to 3 strategy, you can lose a lot and still win because you're risking 100 to make 300. The trick is mentally playing that out. Okay. All right. Chapter 4 summary in one sentence. Here we go. The most powerful force in building wealth is compounding, and the secret is simply staying in the game long enough for it to work. If you're constantly getting funded, blowing, or if you just can't even pass, if you can't even get funded, you're not even allowing the opportunity for like the compounding to start working. You know, when, like I had a guy who had a trade. He's like, look, I'm pulling a payout today. And he showed a payout of like $435. And someone was like, that was it? That's all? $400? And he goes, yeah, 435 times 20 because I'm using Apex and Replicante and I have it on 20 accounts. And it was like all of a sudden, oh, okay, that's a lot of money. It was like, yeah, it's like, that's compounding. Okay. But you got to get to that point, right? And allow your wins to compound and allow your risks to get cut, actually. My favorite kind of risk management is when you go to like 1R or 1.5R, you cut your risk in half. So now I'm a $50 loss. I didn't trail my stop loss way up under the last swing low. It's going to come down and boop and kick me out and then continue to my take profit. I was like, hey, I'll just cut $50 off. At worst, it goes to 1.8745R and then turns around. I lose $50. That's fine. I can handle that. Especially if I lose 50 to make 300. That's 1 to 6. Now, I know it didn't start as a 1 to 6, but it got managed to a 1 to 6. So on average, maybe I'm pushing that to a 1 to 4, 1 to 4.5, on average. Okay, because sometimes you enter and it just like comes straight back and you lose all 100 and you get a little slippage and it's like 120. That happens. You deal with that. It's not a big deal. Totally happens. All right. So I hope this video has been helpful. I enjoy making these. I hope you guys are enjoying watching them. I hope they're helping you. Join our community. Come in and say hi. You ain't got to buy nothing. But we got a good product. We got a good system. Talk to us about it. And, drop some comments down below if you've ever had any trouble day trading, or if you're one of those gurus. I don't know why you'd be watching my video if you were, but if you are and you got like that 99.97% win rate, just go ahead and drop down below a little document for me. I'll check it out. And I'm just kidding, but I hope you guys are doing great, and I will see you in the next video.